Stare at Forex charts long enough, you hit the dead zone. Price bounces aimlessly in a stagnant, tightly bound range, and indicators flatline. Most amateur traders get bored in these flatline environments and walk away to find action elsewhere. But elite quantitative specialists actively hunt for these exact motionless zones. Financial volatility operates on a strict cycle. Prolonged periods of extreme price compression are the mechanical prerequisite for explosive directional expansion. By pinpointing the exact moment of maximum compression, you position yourself to capture the entire life cycle of a massive market move before the rest of the crowd even realizes it's happening. Bollinger Bands visualize volatility. The center is a 20-period simple moving average. Outer limits are 2 standard deviations. They widen during price swings and contract into a tight bottleneck when quiet. During compression, unexecuted stop-loss orders secretly accumulate directly above and below these narrowing bands. A squeeze like this is a tense, unresolved equilibrium between buyers and sellers. They are silently stockpiling the combustible fuel required for an impending price explosion. Eventually, that equilibrium breaks. The initial trigger happens the exact moment the price finally pierces the tightly compressed boundary of the upper or lower band. But executing a trade the literal second that band is pierced is the fastest way to drain a trading account. This chart illustrates the classic false breakout. The price briefly pokes outside the band, baiting early buyers, before sharply reversing back inside. The unbreakable rule for entry is patience. You must watch for a full-bodied candle to permanently close completely outside the band. Waiting for that candle to close acts as a definitive filter. It separates calculated, quantitative execution from emotional, reactive gambling. A closed candle is only the first step. To validate the breakout, you need confluence, the alignment of multiple independent indicators all pointing to the exact same conclusion. Looking at the lower panel, you must see a massive volume spike accompanying the breakout. This surge proves institutional capital is driving the move. Simultaneously, momentum indicators need to confirm strength. The MACD indicator must cross into active momentum territory. This specific convergence of price action pushing outside the band, institutional volume spiking, and momentum accelerating functions as a strict step-by-step checklist for trade approval. Taking an unconfirmed breakout relies entirely on luck. Demanding stacked confluence turns the squeeze into a highly reliable, systemic edge. With confirmation locked in, the execution blueprint is entirely mechanical. Enter the trade at the exact second the fully confirmed breakout candle closes. A conservative stop-loss intersects the center 20-period moving average. Alternatively, an aggressive stop-loss anchors immediately below the breakout candle. For profit targets, use the measured move technique. Measure the band's height during compression and project that exact distance upward from your entry point. Regardless of the target you project, the math must guarantee a minimum 1-to-2 risk-to-reward ratio against your established stop-loss. Sticking strictly to this mathematical blueprint eliminates panic and emotional sabotage during the chaotic velocity of a breakout. A perfect micro-level execution still needs macro-level context. Squeeze breakouts are heavily influenced by the structure of higher timeframes, like the 4-hour or daily charts. A squeeze firing in the same direction as an established long-term trend acts as a powerful continuation signal. Conversely, a squeeze in a directionless, ranging market often signals the start of a total structural reversal. You must also track the economic calendar. Executing a squeeze breakout right before a scheduled macroeconomic news release exposes you to artificial, unpredictable whipsaws that will hit your stop-loss regardless of the actual trend. A technically flawless breakout on a 1-hour chart will still fail if it's fighting the heavy current of the daily market. Ultimately, the Bollinger Squeeze is a visual translation of human psychology. It tracks the market's rapid shift from profound indecision to aggressive conviction. So stop staring blindly at flat, directionless markets. Start actively hunting for these high-tension volatility compressions. You can test this exact framework today by opening an FXNX demo account to safely practice identifying and executing these greenlit breakouts. Capturing split-second volatility shifts requires precision. Utilizing FXNX's advanced charting, 0.0 pip spreads, and ultra-fast execution provides the structural foundation necessary to trade these moves. By mastering the squeeze, you take the market's most frustrating, stagnant periods and turn them into a reliable leading indicator for explosive profit.